Thanks for tuning in to another episode of Around the Coin. Today's guest is Des Martin, the Chief Marketing Officer at Outlier Ventures. Outlier Ventures is a crypto Web3 accelerator. They have over 220 companies that have gone through the accelerator. Previously, Des was at Brave browser. We talked a little bit about his time at Brave. We talked about what they're doing at Outlier Ventures. We touched on the influence of U.S. regulatory policy, the influence that the U.S. has on other countries. Des is based in Ireland. We chatted pre-show about living in Ireland and the influence that the UK has, and we just discussed the international relations as it pertains to crypto, which are especially timely, poignant now. Hope you enjoy this conversation. If you do, please give us a thumbs up, a like, share wherever you listen to it. And please do recommend guests if you have guests you want to submit or people who want to join the show. Without further ado, I bring you Des Martin. All right, Des. Well, thanks for hopping on the podcast today. I'm really excited to dive deeper in with you. You've been working at two really significant, influential crypto projects, Brave browser, which I've been a big fan of for a long time. I've interviewed the CTO, and Outlier Ventures, now which you guys are the largest accelerator for Web3 by volume of companies invested, is my understanding.
Correct. Yep.
Yeah. If there's any other context you wanted to add before we dive in on those conversations.
Mike, great to be here. I think you've covered it. I think my kind of career story over the last maybe decade and a half has really been about growing companies. And I've been very lucky that I've joined quite a few companies during periods of high growth. And Outlier Ventures, where I am now, has also in the last year gone through a rapid expansion. Our Basecamp Accelerator program, the throughput every quarter was about kind of 12 to 15 teams. Last quarter in Q1, we did 42 teams, and we're gearing up to do 50 teams a quarter. And like you mentioned, that makes us the largest, the number one Web3 accelerator globally. And that's really interesting because loads of insights come out of like sitting on top of that and seeing the teams that come through, the projects where founders are at, where the industry is at. So yeah, happy to share some of that maybe over the course of our chat.
Yeah, let's dive in there. I'd love to better understand what are the like two or three reasons why a company would join an accelerator, and then more specifically Outlier. Obviously, typically it's money, it's guidance for helping to grow, or insights in the industry for how to acquire users, and then maybe recruiting. I mean, are those the three big ones? Are there other ones that stand out?
I think there's quite a few. And with Outlier, we kind of pride ourselves on the extras that we bring. And I think with every accelerator, you expect just that, some sort of acceleration process. But with Outlier, like within the 3 months of our program, teams accelerate in months plus. And that's super valuable. So if we're to look at over the course of that 3-month program, the hive mind of Outlier, we have over 100 staff. We've got subject matter experts in tokenomics, legal, regulatory, marketing advisory, go-to-market strategy. And we've got a really broad range of mentors from across the industry. All of those people feed in, and the feedback we get from founders is that it's really full on. Like there's a lot covered, and they develop a lot in that space of time. So that compacted learning is really useful on a number of levels. And the first one is you've learned with a group of peers. So you've got people you can share. So you have that sort of network that comes out of it, plus our wider alumni. We've got over 220 companies in our portfolio. So you can imagine the amount of founders and the sharing and the knowledge that can happen within that. But a really big one is coming out the other side, we will introduce teams to our investor network. And those teams have been through this learning process, and they tend to do really well in terms of getting follow-on funding and helping them with their next phase of growth, or indeed sometimes it's launching a product and going to market. But yeah, it's a really broad range of things. Maybe the traditional accelerator is a little bit limited in comparison to what we do at Outlier. We really get behind each team, and we try to put as much as we can into ensuring the later success of those founders first and foremost, more so than anything. We are founder first.
Yeah. And so you run these cohorts that are a quarter long. Are they culminated? Do they end in a demo day, like a traditional
Yes,
Y
yeah. So
Combinator style?
our demo day is called Elevate, took place last week, and that's a chance for teams to showcase what they're about to the public. We also have a private event where teams can pitch investors, but we do keep those separate. Obviously, investing at an early stage, we need qualified investors, but we have both. So there's a chance to show the world, and there's a chance to do the traditional demo day and pitch to potential investors.
And how does it differ from traditional Web2 companies? I think of fundraising for Web3 is kind of a skewed or slightly different approach where you're maybe raising money to give away tokens or some sort of financial incentive. Typically, Web2 is like, or just a traditional capitalization structure for raising money is you're selling equity in return for money. And that could be in a convertible debt where the equity is delayed, but that's basically the trade. What's the typical trade or the typical mechanism for investing in Web3 companies, or how many is it settled? Like, do 95% of companies do it one way, or is it completely all over the map, or what are you seeing there?
It changes as the market cycle changes. So I think if we were to look back maybe a year ago, and even as far as kind of maybe up to 9 months ago, it was very much early stage projects, which would be what we would invest in, seed and pre-seed, are looking at raising money via SAFT. And that is ultimately the exchange of tokens once they've done token launch. That market has slowed down, right? So the wider Web3 space is going through, it's no secret, a bit of a bear market. And the emphasis now is very much on if a project has equity, equity takes priority. And so raising money by SAFT is still possible. It's still happening. I don't have the exact stats, but the current crop of investors are really looking for, how do I get equity and or tokens? And also they want to ensure that the team and the project has a path to real break even, like credibly. And I think in the height of a bull market, in the height of maybe the biggest tech bubble we've ever seen, I think people will look back and say the COVID tech explosion was maybe on a par with the dot-com in some ways. And so I think when things are weighed up, founders, investors that are looking for founders, they're looking for, can you get to break even? Is this a project that is going to start to deliver a tangible product, real revenues? And that's quite different to what we would have seen 18 months ago. Now, Outlier has always looked for those things in our founders, but the wider market was really frothy. And there was very much a wider trend where people would invest and investors would put money in, hoping the tokens would come out, and then those tokens would be liquid very quickly, and then they could exit. And that's some elements of that may return. Hopefully a responsible element of that will return, but that world is behind us, where that sort of money in to token flip quickly is not, we don't see it in the market at the moment, not for real projects.
Mm-hmm. Mm-hmm. And is that because it doesn't work? Or do you think it was too early, or it's just like a bad mechanism for raising?
So I think at the moment, there's not a lot of appetite to buy tokens, right? I think there's been, the US, unfortunately, has gone considerably anti-crypto. I think it's fair to say, right? Elizabeth Warren, maybe behind the scenes, Bernie Sanders, that they have, and the SEC, that there's been a consistent move with this Operation Choke Point 2.0 that has reduced the appetite to invest in the US. And then in other parts of the world, we've had inflation, people have less money in their pocket. So all of these things mean that there is less appetite when a token comes on the market. But there's still scope for quality. And I think that's the important thing. So there are still quality projects that are coming out, that are launching tokens, that are doing well. Less, but that's still there. And I think when some normality returns to the market, when there's some clarity from the SEC, when there is some international clarity around regulation, I think we will see a sea change. And some data points around this. Larry Fink sits over the biggest assets under management globally with BlackRock. I think it's about 13 trillion. He has said that he sees tokenization as being an important part of how financial markets evolve. And many others who are in very senior positions have said similar things. So tokenization is going to be a feature of the future, but the exact mechanism, the exact way it's done won't look like it was before, which was kind of flipping tokens quickly. I think there will be a structure that will enable people to responsibly put out tokens, but it'll have to be done in a way that fits regulation and fits within legal jurisdictions, would be my
Mm.
take on it.
For the companies that you've seen a lot of companies go through, and there have been even before your time. Are there certain filters, categories, models that you have seen that seem to work the best or better than others? Like, is there a of the companies that are working, maybe there's a few examples you can give of specific
Yeah.
companies, but I'm really interested in what category of company is emerging as financially viable at this point?
Yeah. Well, there are two that I can mention that we invested in these companies way back. So we're talking 2018, possibly 2019, Fetch.ai and Ocean Protocol. Both are, this was riding the wave of some of the AI enthusiasm that's kind of broken out recently. But we invested in them a long time ago. And I think those projects are kind of coming of age because it does take time for projects to develop. The reason I mention those in conjunction with AI is that we've had this thesis that goes back some time. Our founder, Jamie, has referred to the Convergence thesis. And that is that certain big technological trends are actually going to converge and they will overlap. So we have AI, we have what's happening in the metaverse, and then we have what's happening in kind of Web3 and blockchain. And those things you're starting to see that overlap, which is really exciting. In fact, I don't know if you've noticed on Twitter, Grimes, she has said that any music that is done with imitations of her voice, she'll split the royalties with people, which is a combination of AI and blockchain to track, which is interesting. And then there's a metaverse component with some of the artwork that she does. So that's just one example where you're seeing all three in the last couple of days to kind of spark off each other. But hopefully that gives you some insight. I think at the core of where we look at is these big technological trends, and we've invested in those three areas quite heavily. So infrastructure as well that underpins them, but we've invested heavily in those over the last 5 years in particular. And I think that gives us a good balance. We didn't know ChatGPT was going to take off, but you can see these trends are slowly building and they are coming together as well as they grow.
So would the inverse also be true? Would you say that without convergence, there is not a substantial viable investment thesis? Like if you were just to invest in a crypto project that is innovating on a specific like foreign exchange trading mechanism, like if you take just the pure financial technology industry, the traditional financial technology industry, and you have a Web3 company that just innovates on one part of that, it doesn't integrate AI. It's not looking at social. It's just taking whatever commodity derivative
Yeah.
something and they're just putting it on
Some element
Web3.
of DeFi, something like that.
Yeah, yeah.
I don't, I think maybe the breakthrough moments will potentially come with some of the convergence. I think particularly when you're doing early stage investing, you're not looking at the world as it is. You're looking at the world as it's going to be in 4, 5, maybe even 10 years time. And I think the things you've mentioned, we've invested in quite a few DeFi projects, and we understand that there is going to be some legal and regulatory hurdles that need to be come, but there's actually a tangible benefit. And the traditional world of finance has quite a few. There are moats that make it much slower for things to be adopted, but ultimately a better product or something that cuts out a lot of intermediaries and a lot of inefficiencies. It's kind of like water through rock. It finds a way over time, right? It can be slow at the beginning, but it does find a way.
Interesting. I want to ask you a little bit more about the influence of regulation. We've had NFTs, which are influenced by regulation, but certainly the issuance of capital, the people investing in crypto projects, getting tokens, the rise and fall of these different hype cycles is staggering. At one point, I remember I had like 4 different friends starting an NFT trading business, and actually a company I was involved in was acquired through that. Where is it have these things gone to completely like I don't want to say dead, but 1%, 2% of their previous existence when you think of investing using tokens, NFTs? You tell me, like, why are
So
they so sharp and how do they live
I
on?
think there are hype cycles and there are adoption cycles, right? And new tech tends to come in this like S curve where the bottom of the S is always higher than the previous bottom until there's a breakthrough moment. So I think it's very easy, particularly in a bear market, to write off everything that happened in a previous cycle. And the reality is there is a lot of froth and there's a lot of stuff that should be written off, but there's a lot of really good core projects and primitives and things that are laid down that maybe it won't be clear until a little more time has passed. And that's not just crypto or Web3. That's railroads. That's the telecoms boom. Like these waves of technology, they have after the hype, people tend to go overly negative on things, and they tend to go, well, everything is in the same bucket, and that's actually opportunity. That's from an investor point of view, that's where there is real opportunity, because you've got to see some of these technologies in the wild. You've got to see what some of the potential is. Yes, maybe some of the wider users or maybe some of the investment community have kind of moved away from them, but the potential is there, the promise is there. And the thing that keeps me particularly excited about the space is the quality of founders that are coming in that are building upon the infrastructure layers, but sometimes it's the previous projects or the ideas. We're seeing more founders applying to our accelerator than ever before. And the quality is up. The background is really impressive. People who maybe had worked in well-known big tech companies, or people who had pretty successful careers, multiple time founders, they're all now looking at some of the things that happened over the last 2 to 3 years and saying, well, that was actually really interesting, but maybe it wasn't done right, or this bit had a lot of potential. It could be done this way. So I think that kind of crazy, frothy wave, there are green shoots in there, and we will start to see them. We see them on our side, but I think the wider public will start to see them as well in the coming, maybe even the coming year.
How could it? So so I understand you correctly, you're saying that you've seen more applications of founders come in this year than last year.
Yeah.
Given that it is a bear market to a significant degree, how do you explain that? I would think that feels very counterintuitive. I think there's a
Yeah.
lot more founders rushing in when the market is super frothy, but you're saying the opposite, that people are now in a bear market, there's more people coming in and applying.
Yes. And it's a good one. I think about that a bit. I'm like, so why? And I think there are many factors. I don't think we can put it down to one. I think there's a lot of people who are sitting on the sidelines, and with all of the various different tech layoffs and the different kind of changes that have happened, I sense a lot of people are looking for something different. But the interesting thing is what we're seeing now is the builders. We're not seeing the frothy, the people who, as you say, maybe heard about something where they thought they could make a ton of money quite quickly. We're seeing people who are coming in to build core infrastructure, to build projects with a long-term view. And that's, I think that's really promising, right? When the tourists leave and the builders come out in numbers, I think that's
Yeah.
that's a really good sign. I don't have a very clear, like we're seeing more applications and more builders for one reason. But I do think a lot of people watched the last 3 years play out, wanted to do something, and now feel it's the right time.
Yeah, yeah. There's a kind of cliche that in the down markets is when everyone builds. There's less excitement, less distraction. I would talk to people, I'd interview people on the podcast, and they're like, "Oh my god, the last week, the last 2 weeks are crazy." And what they're getting at is the crazy. The word "crazy" means distraction. It means
Yeah.
people are sending you Telegram messages. This company's doing this. This is a massive change. And so maybe it's not about the up and down. Maybe it's about volatility and like not having your Twitter or your Telegram blow up with messages means you're more productive. I wanted to ask you a little bit more. You mentioned Elizabeth Warren's declaration of war against crypto, and that seems to be a quite overt direction that the SEC and the United States federal government is taking against crypto. Is this something that you see a number of founders concerned about? Do they just throw caution to the wind and jump in regardless? Do you think the existential risk of like the US like clamping down hard and almost banning all crypto projects and crypto trading and the influence of the United States and the Western world? like, is that a real threat? Because it felt to me like we had passed the point of escape velocity. You have hundreds of companies in your crypto project. I talk to people who are super, super smart. They're running projects with dozens or hundreds of people with millions and millions of it felt like this is beyond experimental mode. And now this talk of like banning crypto, it just what do you think about this? Is this like should we be as worried?
Well, I suppose first of all, I've worked for US companies and I've lived in the US, but I'm not a US citizen. So I'm always kind of wary of throwing in my 2 cents when I'm not resident in that country. So it makes me a little bit, there's an element of sadness when I see the US turning its back on an industry that I love and I think has a huge potential. What we are seeing is a lot of founders are very mobile, right? So I don't have the stats to hand, but we've seen quite a lot of teams from the US get through to our investment committee too, which is the stage before we offer that they can offer to go on our accelerator. But I understand some of those founders are in they're in like Lisbon in Portugal, some of them are in Dubai, some of them are in London, some of them are in Mexico, Canada. So maybe there is, and I don't have enough data points for this. So some of this is I suppose kind of anecdotal, but it does seem that founders are maybe migrating outside of the US or else they're looking to be based in the US, but most of their energy and efforts will be overseas. That seems to be the trend that's emerging.
From somebody not living in the US, outside perspective, why do you think the US is so strongly targeting crypto as an enemy?
I can just guess. I think it does seem that there is quite most of the people who are regulating so hard against crypto are over 70, right? So they don't come from a position where they really understand the space. And I also would assume that whoever is lobbying them the hardest is probably not putting a very positive slant on the space. So money talks to some degree. So I think crypto doesn't really have a strong lobby. I think we will learn from this. I think there will be a very strong lobby that will emerge that will maybe give crypto an edge in time. But it's one of the things you got to retreat, rebuild, and then work forward. So I think those are some of the things. I also think the FTX debacle, whatever you want to call it, like that. And from what I understand, and I do need to check this, but as far as I understand, Gary Gensler was very close to giving FTX regulatory clearance on a whole range of different things. So that would have, it's pretty incredible that somebody so in the tent, somebody who was very close to the traditional financial system, it got exposed in such a way that I think everybody must be doubting themselves afterwards going, hang on, like if somebody, and I think there was always signs. I'm always skeptical as a footnote. I'm always skeptical of somebody in crypto who kind of in one cycle appears, explodes, and there's, you kind of need somebody around for 2 cycles to really understand the ups and the downs. But that aside, I think the US establishment is going, when somebody we thought was reputable turned out to not be and turned out to blow up in such a way, I think everybody then is trying to distance themselves and go, well, we had nothing to do with it, and trying to put as much distance as possible. So maybe FTX fallout is also a consideration.
Yeah, so having a kind of a strong incumbent financial market, which probably has all the incentive and money to lobby
Yeah.
the points in government, like Elizabeth Warren, who are most likely to listen to it. There's also obviously FTX fallout, which seems to me like it's just maybe it was a function of the culture, but it seemed like any bank could have done the same thing. And in fact, like they did, right? Silicon Valley
Yeah.
Bank went under. But it wasn't for the like the blatant I don't know if it's labeled fraud now in hindsight, but moving money out of an account that you said would be just for trading. It seemed like
Yeah.
it had really nothing to do with crypto, but maybe the culture behind running a crypto company with super young people in the Bahamas
Yeah.
that is just like figuring out as you go. So they didn't have like if you go into a bank, they're just going to have this culture of regulation and oversight,
Yeah.
and that just pervades every bank because they have to open up the banking charter and they have to get the licensure and they have to have a chief finance. Like everyone is thinking about oversight and regulation.
Yeah.
What,
But I think you hit on
what,
something really, really interesting. And that is that the earlier regulation in the US pushed a lot of firms offshore. And the fact that FTX was offshore meant that, as far as I know, they used QuickBooks for their accounting system. There was a whole lot of things that were just they were like Swiss cheese. There was holes in so many things that they did, and nobody was ever there to check it. They bought a lot of people really nice property in the Bahamas, and I understand that meant that they had carte blanche in the Bahamas to kind of be and do as they choose, and that's really unhealthy because they had no checks. There was no checks and balances on a very young founder, and there were stories that when big firms like Sequoia were talking about investing, he was like, "Okay, but we'll talk about investing after we play League of Legends and whatever." And it was all this sort of culture, which was it was almost too good to ask questions, which is very suspect. But again, I think the fact that FTX wasn't regulated was a core problem. What I don't understand, and maybe you can tell me as somebody who's sitting outside of the US, Coinbase seemed to do everything they could to be regulated, to go down that route, to get listed. Circle, who are affiliated with Coinbase, Jeremy Alistair, I think his name is, but they really did everything they could the right way, as far as I understand. And now they have been kind of thrown under the bus. I can't quite understand that part. For me, that's the question. When you had people who wanted to be your natural partner in the US, be the flag bearer, and then we got distracted, or the US got distracted with FTX, and now it's like, okay, it's all bad. That part confuses me.
Yeah, I feel like a couple of influences play into this. One is the United States owns the global reserve currency. And so
Yeah,
that, and in a declining empire, is one of the last remaining major leverage points that a country has from a federal perspective. So
yeah,
crypto, Bitcoin in particular, is the off ramp to that. And so that's the
yeah,
escape hatch that people can run to if the United States
yeah,
starts printing off its debts and inflation starts really grinding up. And so they want to block the exits before they crank and start printing. That would be
yeah,
one influence. The second, as you mentioned, like the lobbying, is the existing infrastructure, is the whole world, the financial markets really run on US banking rails, as determined after World War II, those
Quote
huge
system.
influence and
Yeah,
regulation. So I think that's another thing. And when the crypto market is cranking and it's just booming, then you don't have any political leverage. Everyone's like, oh, this is the greatest thing ever. But then as soon as there's the FTX, as soon as the market crashes, as soon as we hit the political instability, now people they prioritize safety over innovation. So that's where I think the change in the political winds to look at crypto as the enemy means that, okay, just like I think of these systems oftentimes as analogous to organic systems. You have your body, and then everything in it is looking for threats of invaders. And when it detects one, your immune system recognizes it and it attacks. The threat to the establishment regulated body is non-regulated entities. So you'd say, well, why would they attack Coinbase? Well, sometimes the body has an autoimmune disease where it recognizes its own self as the enemy. And it does that because of like a mischaracterization of what itself is. And so I think the federal government is now reconceptualizing itself as a US dollar entity. Like the federal government and the US dollar they are the same thing. They are
yeah,
preserving themselves. And so they look at Coinbase and they say, "Oh, you're the exit out of here. Even though you're regulated, we shouldn't have done that. That was a mistake. You shouldn't have been allowed to even get regulation in the first place." Thus, attack dogs. And they
yeah,
figure out a way to bring them down.
yeah. I also think the nature of the Bitcoin narrative, as you say, that it is the off ramp, and there's a lot of chat about de-dollarization around the globe, and Balaji Srinivasan's $1 million bet. All of those things, they don't go unnoticed. So I think they do bring us into conflict with regulators and with the powers that be, because it is a direct challenge. But I don't know if you've read, there's a book called The Sovereign Individual. Maybe you're familiar with it.
Yeah.
In like the mid-90s. Rees Mogg and Jim Davidson perhaps is the name, but it's very interesting. They laid out a lot of this stuff before Bitcoin was around, and they had a phrase that like cyber commerce would lead to, I think what they called it was some sort of like a digital. They didn't call it digital currency, but the equivalent. But they laid out a lot of the stuff that as governments start to lose power and as they start to print more, there is a temptation for people to start moving into the digital. and moving away from being kind of trapped within a traditional nation state and being kind of trapped within traditional regulations and taxation. So that's something people have been talking about for a long time. And I think the powers that be are kind of like, okay, we can't let that go too far. And we're going to have a very interesting, maybe decade ahead as these kind of
Yeah,
forces play out against each other.
I agree. To Balaji's point, I agree with many of the things he says. One of which that I think is central to his perspective and mental model of the world is this shift from left versus right, blue versus red, sprinkle in yellow, and you have U.S. dollar green versus Bitcoin orange. And I think that's what he's effectively betting on, is that there's going to be, you have to be forced. Like, Des, do you want to join team U.S. dollar green or Bitcoin orange? And that he's like, that's enough of a tension. Like it's not like Occupy Wall
Yeah.
Street where it's like 97-3. This is closer to 50-50. Maybe like there's
Yeah.
some states, Texas, Florida, Wyoming, who have already passed laws that
Yeah.
incorporate crypto. So politicians are accepting salary in Bitcoin.
Yeah.
I think that'll be the tell. I wanted to ask you though, why maybe do you see, and if not, why not? Why are there not more centralized efforts among crypto companies and accelerators like yourself to organize a kind of resistance, a centralized point of resistance, whether it's a petition that people can sign, a campaign, a law, maybe just write the law and see if you can get it passed. I was, as an interesting side note, I was learning more about how psychedelics were regulated. And I live in Oregon and my wife is really into this field. And the person who, the Oregon, it's like we hear these high level things like Oregon passes a psilocybin legalized magic mushroom law with clinical interventions. And they have this thing like mapped out. It's like, oh, go Oregon. But it's not go Oregon. It's go these two people who sat around and wrote a bill on Google Docs and drove to the state house and like pitched it there. It's like it's very grassroots but you can really make things happen over a course of a couple of years. And I don't, maybe I don't see it and it's happening, but s- give me your take. Like, why is there not why don't you and a bunch of other crypto people that are running large firms just write the bill rather, and then try to get it passed? I get you're outside the US. I'm not saying you specifically, but
Yeah,
I'm like,
well, I think, and we do try work with the UK authorities over here, and I suppose help educate and steer things. It's a good point. I believe Coinbase has tried to do this, and they have tried to be maybe a voice for some of this. It's a good point. I couldn't give you a concrete answer. All I can say is that it's needed, right? And I think in the US, and again, not being a US citizen, I was very careful of saying too much because I don't necessarily know exactly how things are on the ground. But I do think you guys have like a really strong tradition. I'm a big fan of the founding fathers and their initial documents. Like there is a real chance to change. And I think in the US, it seems to me the change maybe is not so much I wrote a petition and went to the state house, but it's like I'm actually going to move to the state which is most friendly. And then you get this people vote with their location. And it's a more powerful vote than maybe a vote for the ballot box because it really steers things. And the apparent decline of California and the rise of some other states is really shocking for me, for somebody on the outside. I used to love San Francisco, and the last time I was there was 2020, early 2020, and I was shocked. And I understand it's gone downhill quite a lot since then. But I do think that's that part of the magic of the US. People in Europe would not do that, right? That's not the European thing. I don't think anybody else in the US or outside of the US has that sort of mobility where it's like, I'm going to go where I'm treated the way I want to be. So I think that's fascinating. And to go back to your point about Silicon Valley Bank earlier and Balaji's point, things happen so fast now. Silicon Valley Bank went from everything is fine to a handful of newsletters and a couple of VCs saying we're not so sure to the bank going under. So in a social media, in an always on world, people could very quickly decide, well, I'm switching to Team Bitcoin, or I'm switching to maybe Team Gold, I'm switching to whatever team, but that's a very interesting dynamic. Things could change very, very fast. I still think Balashi's bet of $1 million Bitcoin is probably a little bit. I don't think it's going to happen within the allotted time. Maybe in a couple of years.
well, I think he would also agree. In fact, it's a lose lose. Like if it ever
Yeah,
were to get to 1 million, then he would have been better off just keeping the one Bitcoin.
Yeah.
And obviously if it doesn't, then he loses. So I think he would say, yeah, there's very little chance it gets there in 90 days, but more so that it's like, it's supposed to call attention to the issue.
Yeah, I think he described it as the Paul Revere kind of moment. And I, I, I followed him early during COVID, and he really tried to tell the world about how people need to be aware of COVID, the risks, the dangers. And he was talking about that in, I think, early January. You're going to fact check me on this, but very, very early, way ahead of everybody else. And he wasn't listened to. And I would say maybe that haunts him a little bit, or maybe that's something that he feels the next time he sees a comparable situation, he needs to let people know, and he needs to do it in a way that really grabs people's attention. And maybe he felt, I don't know what his financial position is, but maybe he thought putting a million, I think it might actually be 2 million on the line, was worthwhile to get people thinking, and maybe to steer people in a particular direction.
100%, 100%. What do you think the influence of the regulatory policies in the US are outside the US and other developed Western countries? I mean, do you think if the US, say, hypothetically in the next 5 years, does clamp down hard, like all crypto exchanges shut down, access to the crypto rails cut off, we're like in prohibition,
Yeah.
how does that affect the UK and other Western
Well,
countries?
there are parallels here, right? So when the US went off the gold standard, the euro dollar market moved to London. So, and if you look at JP Morgan, HSBC, all the biggest banks in the world, their HQ is in London, which counterintuitively, London has been a financial center for a long time, but it's kind of counterintuitive they would be in London and not in the US, which is really the economic hub, or at least has been over the last 40 years. And that's because the US pushed certain stuff offshore, and the UK gladly took it, and it was a huge business. London boomed in the 80s. The UK transformed from there being riots in the streets and all sorts of different things going on in the 70s to being a very kind of yuppie culture in the 80s. And that was because a lot of banking institutions and financial flows went through the UK. So I think potentially something similar might happen. I'm not going to be a carbon copy, but Rishi Sunak has said that he is open to exploring and making the UK a more crypto-friendly space. So I think the UK is definitely seeing an opportunity. And in the Middle East, I'm surprised how many applications we get from the Middle East, how many founders are there. There is a lot of founders. Interestingly enough, a lot of Indian founders. India is not super friendly towards crypto, so a lot of them would be based in the Middle East. And then further into Asia, there's quite a lot happening. But a lot of those smaller territories, even interestingly, even Hong Kong, which is under the thumb of China and the CCP, but they recently opened up Singapore. Temasek, their sovereign wealth fund, has invested in quite a lot of crypto and Web3 projects. So there seems to be pockets that are positioning themselves for an emergent industry. And it seems like those pockets will be the beneficiaries. Now, exactly how you play that out, I don't know. But I do think parts of Africa, parts of Latin America, they need the innovation that's provided by everything from digital money to a banking system that banks everybody, that has loans, that has access, that offers a whole range of services they just can't get. So it's not like the US shutting up shop stops the rest of the world. I think maybe some of the founders and the capital migrate to certain areas, and certain markets that maybe are ignored by traditional finance could open up in substantial ways. Kind of some of the things that I kind of anticipated.
That all checks out on my end. Yeah, good. I've heard the next America is the internet. So onward and
Yeah.
upward.
Well, yeah. Well, like that's the thing. We've been speaking about regulation and speaking about, again, so many things. When regulation comes in, they just grind to a halt. And there's been quite a lot of stuff in Europe recently with Germany closing down their last nuclear power plants. And nuclear power is very, what's the word? People have very strong opinions on it one way or the other. But in terms of outputs, it is much greener than coal. But, you know, the nuclear industry through regulation pretty much stopped in the 80s. It's just, there's been no new plants built. Everything's been shut down. And there's a new way of building plants, Gen 4, right? Which is always off rather than always on. So if something goes wrong, it switches off rather than it going on like a Chernobyl or any of these others, or Fukushima. So there's my point being, just because something is the traditional world of atoms, stuff gets regulated so much that a lot of really promising things are unfortunately regulated to a standstill. But you can't do that in the internet. Right? So that's the magic. That's the beauty of the internet, is that it is, but to some degree, we need our founding fathers. I mean, maybe Bitcoin and the Bitcoin white paper is part of that. But we need those tenets that help people understand what this new frontier can be. And I love the idea that people are going to migrate from online communities to offline communities rather than the other way around. So people were friends and then they went on Facebook and they went from kind of physical to digital. I think now a lot of people who've got common interests around the world meet online and will start to migrate to physical locations. And I
Yeah.
find that really interesting. It's kind of
Yeah.
Balaji's network state, right? But
Yeah.
I think
Yeah.
you can see it in many different places, even from links now, golfers coming together and buying golf courses. But I see it in lots of small little ways and lots of different communities. And I find that fascinating.
Are there any companies that have come through the pipeline that are addressing this specific area?
Within our portfolio, off the top of my head, no, well, obviously we have the number of DAOs that have been through our portfolio. We actually provide advisory services for DAOs as well, which is quite relevant. I think DAOs as a space are still emerging, and they really need to be able to plug into an actual legal framework for them to have reach their full potential, because otherwise it's a bit notional. But I think the potential is there. We don't, to the best of my knowledge, have a kind of a digital to physical. There are 220 projects in our portfolio, so I may have missed one, but
Sure.
I think I just see lots of inklings of it, that a lot of projects are the physical meetups, people migrating together, these hubs that are emerging. It all kind of points in that direction.
It's exciting. I know you had to jump. Is there anything that we didn't talk about that you wanted to mention before we
Um,
jump out?
we kind of covered a lot of stuff in
Mm.
there, and I would mention, yes, well, maybe a call to founders. Any founders that are building in Web3 that are doing something interesting, something that's innovative, particularly if it crosses over those elements that I mentioned within the metaverse, XR, VR, AR, Web3, DeFi. I'm really looking at how we reimagine the financial plumbing, and then AI, any of those elements. And please check out our website, outlierventures.io. And we have applications for our next program opening up next month in May, middle of May.
Awesome, Des. And we'll have links to Twitter and the website and everything else in the show notes. Are you active on Twitter? Do you want to throw out your...
I am indeed. Yes. You can find me at Desi, DESSIE_Martin.
Sweet.
You can follow my musings there.
Well, I feel like we could have gone another hour plus. I would love to someday and have you back on. But in the meantime, thanks so much for hopping on today, Des. This has been a lot of fun.
Awesome. Thank you very much, Mike. Appreciate it.
Cheers.